All right, good day, everyone. Yeah, so prior to our previous post, um, if you haven't checked it, you can just if you haven't checked it out, you can just check it out so that you will have a full scope of where we are coming from. We did a little analysis on the higher time frame for gold. So I just want to do a little review of the trade I caught today on gold. And why do I do this? I love to do a revision of my trades. You get so it helps me to be intentional. You get because in trading, what we are looking for is consistency. Yeah. So we can't keep doing things, not even understanding anything, not even conscious of anything we are doing. So this is why I love to do this at the end of each trading day, or sometimes if I don't have the chance, maybe the next day or maybe later on. But it's for me, it's important for my journey. It's a way of reminding me, or it's a way of reminder for myself. It's a way of making me to be intentional. And again, those revision helps me, yeah, because it helps me for consistency and all of that. You get so so prior to our previous video, we already established that our bias is gonna be bias because we from the daily time frame we saw that Euro USD recently broke our all-time high. That's already been established. So we noticed something here that we have this fair value gap that price created, and then so the first candle closed as a bearish. Okay, sorry. The third candle closed as a bullish candle. That's the candle that tapped into the fair value gap. And then the second daily candle closed as a bearish candle. That candle also dipped into the fair value gap. So that being said, from our previous video, we established that our draw on liquidity is actually the buy side liquidity. Didn't know I have not named, let me name that out. Buy side liquidity. Don't worry, this video is not going to be long, just a revision. So this is our draw on liquidity. This is our target. This is our target. So and we were saying I wanted to see how this candle closed. That's this yesterday's daily candle. And so so it's dipped into the fair value gap, and then the body of the candle closed above. So this was what I was waiting for. I want to see how this candle closes, and luckily the body of the candle closed above, so which is indicating like it's giving us a good notion to look for buys today. So this being said, let me come down to a 15 minute, not to waste our time, to see what I was looking at. 15 minutes. Yeah, so we can see this demarcation. This is the New York section open. This is the New York section open, which opens by 7 a.m. New York time and closes by 10 a.m. New York time. So this is the demarcation. So after so let's come down to a 5 minutes. I think it will be more clearer there. Yeah. So this is the 3 minutes. So on the 3 minutes, I notice after the New York section open, then I noticed that we had this fair value gap below, which obviously will probably be an initial draw on liquidity for price, which price did. Yeah, so I marked it out. This blue shaded area here. So I was watching it, and then price kept on drawing. So the moment price came into my area of interest, so I went down. So the moment price came into my area of interest, I went down to the 1 minute, to the 1 minute, to the 1 minute. Yeah. So and we have this order block here. Let me mark that out so that you guys can see it. And we have this order block here. That's this. So that's this. So I can remove that now. That's this line I drew and demarcated. So remember, the New York section open, price drew into our fair value gap. That's our 3 minute fair value gap. Now now remember that the reason why I'm coming to a lower time frame to do all this is because I have already established my bias on the daily time frame. And the daily time frame, I am looking for buys. Please don't get me wrong. So I'm not just coming to a lower time frame just looking for trades. That's one of the fastest way to burn out our accounts, and yeah, like it doesn't help, you get. So because on the daily time frame I already have my bias, so that is why I just wanted to point that out. Yeah, so this area now is inside of our 3 minute fair value gap, and then this we have a little order block there, so which price came into this area. So the moment price hits this, because I scaled in with two positions, the moment price hits this our order block here, I entered with one position. Then I was watching again, and then price came, price did a structure shift to the upside. So the moment price hits this place, then you can see the bullish candles, the three consecutive bullish candles shifting to the upside. You get. So the moment price came now let me mark that out so that we can see it. So I already had one position in. So the moment price shifted to the upside and then left this space here. I'm coming. Yeah, so and then left this space here. So at this point, price was at this point here. At this point here. So when price shifted to the upside at this point here, then I was watching this level here. So the moment price came back down into that level, I scaled in with another position. So I can take all this off now. So we can see the price action and mind, and yeah, so it took some level of patience because at some point it will seem as if price wants to hit your stop loss and then go against you, but it takes time. When you keep doing it, then when you keep doing it, yeah, so there's this confidence that experience builds. So you learn to trust price, you learn to trust those repricing, you get. So at this point now, price actually wanted to reprice back down in order to set up and prepare for our main move going to the upside. So when price came back down into this level, we can see I marked that out. So then I entered, and then getting to the I think the two, yeah. So getting to I think the 8 a.m. or almost 8:30 time. Yeah, so that's when we began to see some momentum in the market, and price began to push to the upside. So the moment price pushed to the upside and broke this level and broke this level here. So price pushed to the upside, broke this level here, left a fair value gap, and then price came in, tapped into the fair value gap and shifted to the upside. We can see it again. You can see the price back down a little bit and shifted to the upside. So our targets was buy side liquidity here. That's the immediate liquidity, but like the immediate liquidity before the markets open. You get, so we don't need to be targeting unrealistic levels. We just take what we can get and move out. So targeting this level here, let me name that out. That's buy side liquidity here. So we can see that price did some, you can see price retraced, tapped into the fair value gap in this area again. So we can see price retraced, tapped into this fair value gap. Yeah, so and then we had the momentum to the upside. So we can see how price just kept on drawing to all the way to our drawn liquidity. Yeah, that's the buy side liquidity. So we can see this institutional order flow. So each price retracement only acted as a ladder to push price upwards to our draw. So this fair value gap, breaker block, order block, fair value gap again, and then you can see how many times it retested it. One, two, three. No, actually four times. One, two, three, four. And then finally, so the moment it came into our buy side liquidity. So two positions on this one. So that's it for today. Thank you guys and see you later.